They've been able to achieve, what, 20% year-on-year growth since 2005. You've been around since 1994. Now, you're not primarily in the co-working space, but it is a big element of your business nonetheless. Why, first of all, is it so hard to make money?
It's not necessarily hard to make money, but it's you have to make money paced with client demand, and you have to pace your expansion with that client demand. So what's happening with WeWork or some of these other co-working startups is that they are currently battling to secure market share based on the amount of space that they've leased, rather than the amount of space that is revenue generating or even profitable. Whereas the executive center, we've had the ability to build up our premium position over the last 25 years, and that's meant steady 20% growth over a prolonged period of time, rather than what WeWork is.
And you're profitable.
Yes. Well, that's, at the end of the day, why else are you in business except to make money, right? So you serve the clients, you serve a need in the marketplace, but you have to reward your team and your investors with profits, not just promises.
So is there a situation, I mean, WeWork is one, but you could name another 10 in Hong Kong probably alone. Are there just too many players? Is that the issue?
Too many players chasing the beginning of the story of the model, which is secure space, open centers, but not yet, these players are not yet mature enough to be focused on the revenue side of the equation. In the last 5 years, there's about 2.8 billion has been raised from private equity in Asia for investment into my industry. 90% of that has come from China. And so I do feel that there's a bit of get-rich-quick mentality going on currently,
But, we have other companies, and there's so many out there. I mean, Amazon ran losses for ages, and they can tolerate these losses until the investor gets bored and wants a return finally. I mean, Amazon into profitability now and again, but continuing to grow. Uber, jury's out. Lyft, the jury's out. I can name a load of companies. But is that the problem here? I mean, with WeWork, they could also keep on attracting money in different rounds of funding. Yes. Until they start making money. This is
well,
the thing.
If you do continue to attract funding. The difference between ourselves and the companies you've just mentioned is that in my industry, we lease space. So we have to pay rent to our landlords. So the executive center has 132 locations, 14 countries across Asia. And we have a rental bill linked to that. So does WeWork and the other co-working companies. So the revenue is not virtual. It's not cloud-based. It's not the number of hits that you're generating, but it's actual dollars against actual monthly hard costs. And that's why our focus on profitability is so fundamental to how we look at the business.
You're a bit like Regus Business Centres as well, aren't you, in the sense that you're an upscale version, Regus being European-based?
Yeah, Regus is a sort of a global operator. I guess I differentiate ourselves from the perspective that we're the business class section of the airplane. So the airplane hopefully takes off and lands at the same time, but the experience in economy class versus business class is completely different. And our clients, which are 76% of them are multinationals, are looking for a multinational experience in Hong Kong or in India or in China to the same equivalent level as Europe and North America. The other operators are offering something which is less expensive, cheaper, but you get less for it. And then the co-working guys are just battling it out for the day user.
Now, how much of your business has been impacted by these companies? So that's the thing.
Well, the most interesting aspect of it is that it's taken us from being a fringe product 5 years ago, 5-6 years ago, flexible office space. We wouldn't be talking about it because it'd be a subset of office leasing. It exists. Who cares? The investment in promoting their product in the industry from primarily WeWork has raised global awareness of what we're doing. And the idea that you can have your office accommodation in a flexible solution, no capex, short term, makes sense.
Okay, but Paul, you haven't answered my question really there. So has it been eating away at your revenues? That's the thing.
Well, no, I guess what I'm trying to say is it's been driving customer demand. So, when I said we were 3/4 multinationals, 5 years ago, those multinationals would have hesitated at taking space with us because they would have thought that a flexible, short-term, no fixed base lease was potentially a problem, whereas now they view it as an opportunity.
Okay, so how does this all come together? How does the pieces all fall?
We've doubled the size of the business, our business, in the last 3 years. We've tripled the profitability since 2014. And it's a steady 20% growth rate based on the reinvestment of our retained earnings. So we're in a good place.
Just quickly, 10 seconds, do you have an IPO in mind or anything like that?
I think it's late market for IPOs, and we're a privately held company, and we're always looking for smart private investors. Eventually, 3, 4, 5 years out, why not? But in the near term, I don't think the markets are set up for sustaining an IPO.